Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Canoo, ticker symbol GOEV. And here we are looking at the chart, the daily chart on Friday morning, April 5th, during market hours, and current price is right around $2.13, being down just about 5% on the day. And as you can see, we have had a pretty big retracement from the recent highs at $4.80.9, being down over 50% from those highs. So, quite a remarkable pullback there. And I did want to point out that last week I did put out a video following the trading day of Thursday, March 28th, video coming out on Saturday. And I was suggesting that because earnings were coming up, I believe they were reported following the trading day of Monday, April 1st, since we had run up more than 300% from the bottom here to the top, or just about 300%. And at the time of the video, the last video that I released, we were up about 200%. I had suggested that we might be seeing a pullback in the stock price. And following earnings, that is exactly what we saw. And one thing that I do think is interesting about this is in last week's video, I went over all of these levels in the Fibonacci retracement except for one, the 786, which is at a price of $1.98.8. And current price is just above that. So I could see price returning to that level right around $2 a share, potentially finding a floor there before making some moves to the upside, perhaps an attempt to fill this gap here that was created following the release of the earnings report. And that would be returning to a price of right around $3.41.5. So, I do think there is still, some potential upside for the stock if it does return to right around $2 a share. Getting back up to fill that gap represents a 70% move. So that is a pretty nice one right there. And so I do think that this is a great example of when something is running up before earnings, whether it's, days before, weeks before, whatever it is. If there hasn't been a notable pullback and price is up considerably from the previous low, 200%, that is a lot. It is good to prepare for a pullback after earnings, and that is what we saw. And also, when there is community sentiment of, something's going to the moon, it's never going to stop going up, that's really the time to consider maybe taking some profits or being a little bit cautious. And with earnings happening earlier this week, that is a time to be cautious because you never know around earnings if a stock is going to go up, if it's going to go down, sideways, what news will be announced. Maybe there will be a share offering or capital raise. So, it's always good to be cautious around earnings when something is up like this. But now that it is down, I could see it finding the floor right around $2 a share. So, I do think that there is potential for at least a 70% swing to the upside. But I do think it is good to be patient and wait to see where it does bottom out at. It could be putting in bottoming signs today because as of yesterday on the 4th, Canoo did come down more than 9% on the day. And so far on Friday being down only 4%, it could be down a lot more. It could be suggesting that it is starting to find a bottom and that it could be turning around next week. So I would look for what the close is today. If it is above $2 or $1.98.8, that could be suggesting that a bottom is in or near, and that perhaps in the next couple weeks, maybe the next month, price does return to this 382 level here, right around $3.43.8 to fill that gap and give us another 70% plus swing. So, that is what I have to look forward to. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot and happy weekend.